Hello and welcome to the Theo video for Thursday, February 25th, 2016. My name is Jeff White, and today may have been a notable day in the market. Why don't you know, you might be asking? Well, because we just saw an incremental breakout take place here in the SPX, and it happened really in the final moments of today's session. It was not a screaming type of rally where we battled at a big level and then just blew right through it. Quite the contrary. Today's breakout in the SPX through this 1950 level that we've been looking at for the past several weeks was all in all pretty quiet, and just about as quiet as you might imagine. I mean, we popped early in today's session, and then we dropped a little bit here, and then we chopped. So we kind of saw a little bit of a sampler platter type of market here for a while, but then we kind of started this slow grind up in the afternoon. Then we churned for a little while, really respecting a little bit of space between where price had been for most of the day and that 1950 level. So not far from it, but just kind of incrementally edging toward it ever so slightly. And then in the final half hour, and really in the last few moments of the day, we saw enough of a push here to push us above that 1950 level here in the SPX, which of course puts us at a new high for the week. It also puts us above this little February 1st high that was 1947. It also puts us above this modest, minor little multi-day bounce high from mid-January that was at 1950. So this is, in fact, a breakout. It just was not the way you might expect it to occur. And you know what? We've seen incremental breakouts take place in this market at many times in the past. And one occasion, just a couple of weeks ago, might ring a bell for you when the SPX came down here and it undercut this previous low, which was 1812, with a break to 1810. So a little 2-point incremental break. Even then, that little breakdown, it only lasted, a few minutes at that, mind you, before, of course, we screamed higher back to the upper portion of the range. And so an incremental breakout like this, we need to take notice of this, but that's not all there is to the big picture. I mean, what really matters is all the, possibility here for the days ahead for some actual follow-through, which of course we've yet to see. Now, it could arrive on Friday, it could arrive Monday or Tuesday. I mean, who knows when or if it will arrive, but it better arrive, or else traders are quickly going to jump to the conclusion that perhaps this range is still very much in effect. So that, in my opinion, places a little bit more importance here on Friday session and perhaps the next few sessions here. So we're going to watch 1950 extremely close now that we're towing the line here and just getting ever so slightly above that level. So if the SPX here is unable to really separate itself from that level to the upside, play it extremely tight with any long positions, because the mood out there could quite easily shift. Elsewhere, the composite has also seen a nice little rally, not just in today's session, up about 40 points, but also this week. Okay, it's up, decent amount here, and yet it's well shy of this previous bounce high back here at 46.36. So until that level gets cleared, the SPX is, you could say, all alone in this little breakout attempt. Even the Russell, which has been acting much better here of late, coming off this 943 low all the way up into 1031 today. We are still yet to clear this previous bounce high right here at 1037, much less this 1040 level, which is just beyond it. And we've got to go out to like a 3-year chart here to look at that. But obviously, we've seen significant importance on a couple of different occasions here where 1040 served as key support. Once we sliced through that in January, we bounced right back up to it, and it's now serving as a little bit of resistance here. So we're moving into very close proximity from that level as well, but we have yet to reclaim 1037 or 1040, and that's a major level that this particular index is going to need to reclaim. But let's take a look around here at a few of the sectors out there. So let's take a look here at the TLT. And we've seen bonds moving very similar to this. This very clean uptrend line here going back into early January, still very much in effect. We've seen at various times price get capable of, removing itself with a little bit of space between where price runs up to and where that trend line is, but it keeps coming back, kind of gravitating toward it, respecting the pace of the overall trend. Now we've got a potential lower high here, but we've still got this uptrend line in effect. So here in the coming days, these two trend lines, they'll get closer to one another if price doesn't break one of them first. Right now, it's just kind of churning. We had an inside day here in TLT. Overall, the big picture trend is still up despite the possible lower high here that has kind of shaped up here on the daily chart. If we look at energy, this XLE has already formed this higher low compared to 49.93. That's every bit positive. We even saw a very incremental breakout here earlier this week on Monday with a 2-cent higher high. But even XLE is still beneath this red level right here, which is closer to 59.5 ballpark. So still some room here. All in all, this thing is still looking somewhat range bound. So some quiet improvements taking place here in recent weeks, but all in all, there's really no lasting momentum here. This thing is still churning kind of sideways. If we take a look at the financials, there's some potential here for maybe a little bit of a short-term higher low with yesterday's low compared to this 1953 level. So this is a potentially positive shift, but it's going to require a whole lot more work here. We need to see not only the high from this week get taken out, but even this previous high in XLF get crossed to the upside in order to allow these financials to start to shape up. But until then, the trend is still down, and basically all we've seen here in the near term is a bounce within that trend until proven otherwise. Gold obviously ran with tremendous velocity, I guess is really the word I'm looking for here. Lots of momentum here to the upside, and then kind of some short-term indecision, some backing and filling here taking place, and kind of a little bit of compression here until yesterday and today. Price able to kind of exit that wedge to the top end, but no real momentum here either. GLD up just 31 cents here today, so no real follow-through to speak of. And of course, the trend remains up, but a little bit of a kind of a choppy mess there. Silver tracking ETF SLV, also kind of a similar look here, still in this little consolidation area, following this big ramp that we saw in price. So kind of a like a large bull pennant type of a look to it. Price really hasn't responded yet here, but maybe if it can exit this little consolidation area to the top end, it's capable of running a little further. For now, still somewhat under some profit-taking mode, and therefore really difficult to expect a whole lot there. Metals and mining ETF, this XME, found some support back here last fall, and that once it was undercut in November, it became some resistance very shortly after. So we've kind of got a well-defined area here around 16.5 where price had respected it on both sides. Now price has rallied substantially off this 1138 January low. It's up here nearing 16, but has yet to reclaim this 16.5 area. So watch that there for XME. The home builders XHB also seen a pretty nice little bounce here in recent days off this 2772 low, and it's actually just now trying to work its way above the previous bounce high areas here. So not very free and clear of it yet, but attempting to produce a little bit more of a continued recovery here. The issue here is that price is trying to break out, and it's looking a little bit extended here in the short term, given all this green and very little profit taking along the way. You know that trends persist when they see some profit taking emerge along the way, and we just haven't seen that yet for XHB. This IYR is the real estate ETF, and here we've got pretty sizable bounce here coming off of the 65.88 low, big V-shaped type of look here, but still shy of this previous bounce high from February 1st. That's at 72.60, so it's not too far away, but it's still shy of it, and so still looking like a bounce within a downtrend as long as that's the case, because recall, a downtrend is lower highs and it's lower lows. and this thing still has that in effect until it's able to make some kind of a higher high. So watch that as well. Semiconductors, SMH, here again, a big V-shaped type of move, a little bit of a choppy kind of basing action here in the last few days. Nice recovery off the low yesterday. Nice follow through today as well, up 1.1%. Not a giant day, but some accumulation apparently taking place here with these little minor or modest dips getting bought. And now SMH is attempting to kind of push through this little multi-week resistance area. It's got some unfilled gaps here to start working toward back here from January. So watch those if SMH is capable of lifting a little further. XRT, this is the retailer ETF. And here again, we had kind of this double bottom look. And big bounce here off that double bottom and made a new high on this rebound here. So, that recovery high between these two lows, right? So if this is a low here and this is a low, for a double bottom to be confirmed, price has got to get above this level right in here. This is called the reaction high. And price has clearly moved well through that and showing considerable signs of improvement here. So, it's getting a little bit extended here over the last few days. It could stand to rest, but now it's got a little bit of room here to possibly pull back toward this 41.5 area where it just broke out. So watch that level as well. XLU, these are utilities. And, not exactly the sexiest stocks out there, but they're strong. And, this kind of raises that question. Is it a concern to see utilities moving higher? And, time will tell whether it is or not. But for now, utilities have seen this lift here off this late January kind of consolidation area. Big move to the upside, modest pullback, which got bought, and now prices again starting to reach for new highs here. So, all in all, it's a pretty mixed bag out there, as you might expect, given the mixed results that we're seeing in the indices. So for Friday, watch for follow through, namely right here in the SPX above this 1950 level. Watch also to see if the comp and if the rut can take out their previous bounce highs. Because if they can do that and kind of join in with some additional gains of their own, that would take them above those levels. And each of those situations would add a lot more credibility to today's very quiet and so far very modest break above that 1950. Otherwise, we may still be right at home on the range. Thanks a lot for tuning in, and we'll see you in the Theo chat room tomorrow. Have a great night.